All right, so thank you, everybody. Like Mark said, and thank you for that great welcome, my name is Nadja. I'm the Regional Affordable Lending Manager at Freddie Mac, and what in the world does that mean, right? It's the affordable lending and access to credit. It barely fits in my card. What does that even mean? It means that we are here to expand home ownership. Now, who in this room wants to do like jumbo loans all day long? Come on. All right. So we're going to be friends right about now. And I know that this is a big group, and I just want everybody to understand that the reason that I'm here is because I want some feedback. I want some feedback. We're all in this together. So one of the things that we do is that we make sure that we focus on affordable lending. 31% of America. So who wants to not do 31% of the business? Who wants to forego 31% of the market? Yeah, I didn't think so. So we're going to talk about what affordable lending actually means. We're going to talk about affordable lending and the ecosystem and the market data. Why does that matter? Because every single one of us here, well, actually, I don't know that. Let me ask you a question. Who are the leaders in your community? Ha, bingo. So we got one leader here. All right, so who are the actual leaders in your community in the lending business? Ha. I'm just checking because in case I need to go home, because they told me that I was going to come here and talk to the leaders today. I was going to talk to the influencers and the people that could actually make a difference. So I'm at the right place? Okay. So we're going to talk about what that ecosystem looks like, what that market looks like, what are the things that we're looking to do to identify borrower needs and the borrower of the future. Because the borrower of the future is important. It's important for us to understand that so that we can have the right offering. And it's important for you to understand that so that you can better serve your customers. Are we all on the same page? We're going to talk about what the consumer looks like, what the product offering looks like, so that we can then serve folks better. Now, do we know what exactly Freddie Mac does? Okay, just asking. What do we do? We buy loans, yes. We're here to serve families. When I asked you, very importantly, if you guys are the leaders, it's because it really comes down to the consumer. And that's exactly what we're trying to do. So when we go through that market data, we are very interested in understanding what the needs are. We have to understand what the borrower looks like today, what the borrower of the future looks like tomorrow, so that we can have the right offering. We're going to share that together today. So when I ask you for the feedback, it's important because I can webinar at you all day long, right? We can do that. The reason that we do these outreach opportunities is because it's important for us to understand what's going on in your community. That's why I'm interested in talking to the leaders, right? So it's about the customers. Where are my customers? How many loans do you think Freddie Mac originated last year? Give me a number. 0. Good job. That was a trick question because it really comes down to our customers. And who are our customers? Our lenders. And by the way, I'm here today because where are my Flagstar people? Where are my Flagstar people? Okay, so a shout out to my Flagstar people because they invited me here today. So, and a shout out to all of our other customers because it really is up to those lenders to go out there and make sure that the customer is well served. We're here to serve the underserved, and it's about the taxpayer. So I don't know if you've heard, but we are transferring more and more of what that risk is. Just in case you weren't sure, because that's what we were trying to do for that. You see that pretty neighborhood? Pretty neighborhood back here somewhere? It's all the guys at the bottom. This is up to us, and this is what we like to call the ecosystem. It's the lenders, it's the products, it's the outreach, it's you, the brokers, it's our leaders. Where are my leaders? Together, we are going to change what this ecosystem looks like. But without you and your feedback, we can't quite accomplish that. So this is why there's a method to the madness, and we are actually asking for that feedback. So what do we know about the state of the market? We know that last year was one of the best years. Was it good for you? Let me ask you this. How is access to credit these days? Is it tight? Is it just right? Is it too tight? Is it too loose? Too loose. Who said that? Thank you. Okay, why do you think that is? Why do you think we're expanding credit like that? Any ideas? The economy, maybe. Well, how about this? What do you think the delinquency rate is these days? It's less than 1%. Yay, country. That's why it matters. That's why when we talk about this ecosystem, it really does take all of us. Because the more prepared that we have our consumers, and the more responsible we all are, guess what? We get to expand credit so that the rate of homeownership can go up. So are we all committed to raising the rate of homeownership? You better believe it. Where do you think the rate of homeownership is these days? 61%. That's the lowest it's been since we started recording this. That's a problem. It's a little low. It's a lot low. How do you think we increase the rate of homeownership? Loosen guidelines. He wants it even looser. All right. What else? Lower down payment. What's the lowest down payment we have today? 0. That's pretty low. Just saying. Okay. Education, all of those things might be tactics, but the way that we change the rate of homeownership, are you ready? It's a big one. How about we close the deal? Everything else is just a tactic. It comes down to leaders like you to close the deal. This is why we do this kind of thing, because we need to close the deal. And we need to understand what our market looks like in order for us to do that the best that we can. So we have historic lows, we have a strong economy, we know that millennials and minority groups are poised to buy. Do we think that millennials actually want to buy? No. Okay, how about that 85% of millennials think that homeownership is a good thing? Surprised? 85% is a real number, my friend. I love my numbers. 85% think it's a good thing. What percentage of those millennials that are buying do you think are buying in urban areas, you know, playing the guitar, with dreads, I don't know, being bohemian, I don't know. What do you think? What do you think the percentage of millennials that are buying in the suburbs? 10%. Is that enough? What else? 11%. How about 83? This is what I want you to do. We're going to talk about numbers. We're going to talk about data. So for every gap that we feel is a gap, or we're learning something new, or we're busting a myth, I want you to take some notes, because for every gap that we identify according to your markets, for every gap we identify, we're identifying an opportunity. We got that? So for every gap that we identify, we've now identified a what? Because how is it that we're going to actually impact the rate of homeownership? Close the deal. All right, so now that we're all in this together, we understand that household formations in 2013 was 653,000. 2 years later, it doubled to 1.2. 2017, 1.4 million household formations. Why do you think we keep talking about millennials? It's an important conversation, and sometimes we get kind of sick of talking about so much millennials, and who cares, right? What do you think the average age of a millennial is? 28. What do you think the average age of a loan officer is? 44. What else? 55. What else? 54. 54, that's a true number. What do you think the average age of a real estate agent is? 100. That wasn't me, that was them right there. What else? 60. Actually, the average age of a real estate professional is 56. Do we have a gap? We have a gap, okay? So we need to figure out what we're going to do to bridge that gap, so that we can understand that that's where our opportunity is. It's with the millennials, and a quarter of them live at home. But I don't know about you, but I keep hearing about how every single millennial lives at home. Listen, there's 83 million millennials. I'm okay with 75% of that. Because sometimes we are under the impression that every single millennial wants to live at home, therefore, that's not where I'm going to get some business. When in reality, that's exactly where your opportunity is. 85% of millennials think homeownership is a good thing, and of all of those that bought a property, 83% bought in the suburbs. Can I get my collective? Thank you. Makes me feel better. Millennial households, ladies and gentlemen, it's real, it's a thing. Minorities, 75% of the growth in the next 10 years is going to come here. You think we're paying attention to that? You bet. So what do we know about the occupancy share? In the US, 63% of the country is owner-occupied. Arizona, 62. California, 54. Nevada, 54. See, Florida and Pennsylvania, those are kind of in line, but we've got a gap in California and we've got a gap in Nevada. Who here is from those two states? Pretty significant. So we need to pay attention to how we're going to make a difference here with the owner occupancy rate. Because I will tell you that it's important because home ownership is equal to wealth building ship. You guys told me you were the leaders, didn't you? So you have to impact what folks are perceiving the value of home ownership to be. That's on you. Only one of me. I can tell people all day long, there's just really one of me. You're the leaders. Home ownership is important to every single one of us. We've got a gap in Nevada and California, so we need to address it with the value. How many millennials do I have in the room? 1, 2, 3. You see my gap? You see, I wasn't making it up. I asked the question because I knew the answer. It's usually less than 5% of my audience. We've got a gap, and we have to figure out how we're going to change that around. So what does the face of the borrower look like for tomorrow? The US will become more diverse. So if you look at the white non-Hispanic population, it's going down. The Hispanic population is going up. African American population is going up, and so is the Asian. That one's going up. So what does that even mean? Population is important. But we started by saying that the rate of home ownership is actually 61%. There's room to grow even with the population we have. The fact that we're growing in those two segments is impactful, is important, but even with the African American population that stays the same, according to the Sheba report issued by NAREB, that market is actually going to grow by 25%. Why is that? Because amongst African Americans, the rate of home ownership, we said the country was at 61. For African Americans, the rate of home ownership is at 41. Do you think that population is being underserved? Have we identified a gap? Who's ready to start serving that population? It's the borrower of the future, my friends. We have to understand what that looks like. The Hispanic population is growing, and it is the largest growth. The Asian population, although is not as large, is the fastest growing. It's the fastest growing. Adjust what your market plans look like, and if you understand what this looks like, this is what we're doing because we need to make sure that we have the right product. This is what you need to be doing so that you can serve your community the best that you can. What do we know about millennials? 34% of recent home buyers. What else do we know? Over 85% consider it a good thing. 98% of them financed. How much did we say we needed for a down payment? 3%, right? We can get into the nuances later. 3%. Do you know what the average down payment is for a first-time home buyer? Try 7. Why is that? Because they're coming in with more money because they think they have to. Be very careful with what your perceptions are, because it's your job, you're the leaders, you're the grown-ups. Be very mindful about what those perceptions look like, because those are your gaps, it's your opportunities to have that conversation. If they're coming in with 7%, it's because they don't know. 3% is all they need. 83 million of them This is the scarier number. 24 million millennials are mortgage ready. Do you know that according to NAR 2 years ago, every person that was mortgage ready, income ready, credit ready, 60% were too afraid to apply. 60% too afraid to apply. Why do you think that is? They didn't know. Because who didn't tell them? There you go. See how we start changing the conversation now? Take some notes. It's on us to start changing this conversation. If you don't apply because you're too afraid to apply, that's kind of important. That's how we end up with millennials at 14% with mortgages. Do you know that there are more millennials right now than there are baby boomers? That's 83 million folks, of which 24 million are mortgage ready today. They don't even know it. With 14%, we know that they want to buy. 83% of those that bought in the suburbs. How do we end up with 14% of millennials with a mortgage? They don't know it. Have we identified the gap of all gaps? Are we excited? Do we have a plan for tomorrow? Are we waiting for Monday? We ain't got time for Monday. Tomorrow. All right, so what do we know about the first-time home buyer? 34%. 57% of all those that bought a home for the first time were married couples. That makes sense. 2 incomes, right? Starting a family. I would say that if it's all about income, it would mean that unmarried couples would be in second place. Who's in second place? Can I just drop the mic and go home now? Single females, how come? What's the nuance there? It's not a numbers thing, right? Because we only have the income. Because I'll go with that because we're smart. I'll go ahead and own that. Thank you, sir. Okay, why? What's the nuance here? When we're identifying and talking about demographics, ladies and gentlemen, it's not just the differences, but the nuances. Single females just kind of do what they got to do. How about that for a nuance? How about that? Remember back in the day when there's such a thing called discrimination? I'm kind of impressed with the fact that 18% of last year's first-time homebuyers were single females. You know what also? Gen Xers. Gen Xers are those between 37 and 54. When we bought our first property, were we in our 20s? How many? Show of hands. How many of us were in our 20s? We've established the fact that I'm just 29, so I still have time. However, most of us bought our first property in our 20s when the median age today is at 32. What does that tell us? They're waiting longer than they have to. They don't know they can apply. They don't know they can come in with 3%. They're waiting because they think they had to. And when you bought your first property, were you making anywhere near $75,000? You can laugh out loud because I think that's pretty funny. I was making nowhere near $75,000 when I bought my first property, but they think they have to. They're in this waiting game. Why? Because they think that their first-time home buyer, they need to buy 1,600 square feet for $190,000 and that they're going to stay there for 10 years. Wow, 10 years, really? When we bought our first homes, we were a lot more optimistic. Remember those days? I'm going to buy, and then I'm going to sell, and I'm going to buy this condo, and then I'm going to get a better job, and I'm going to do this, and I'm going to do that, and we were optimistic. Do you know that of all the groups, the only group that actually went up in their rate of home ownership was Hispanics? They're at 46%, but they're the only ones that actually went up last year. And according to the National Association of Hispanic Real Estate Professionals, it's a mouthful, why do you think that is? Hispanics are optimistic. Gen Xers are optimistic. Is this room optimistic? We're going to change some stuff. I'm excited. All right, so what does the population age mean then? So then let's look back at our markets. 25 to 34-year-olds, that's kind of that sweet spot when we start talking about millennials. We know that in the country, that That's 13.6% of the population. In Arizona, it's 13.4, right in line. California, 14.7. Ooh, there's an opportunity there. Florida, 12.7, a little bit under. Nevada, 14.4. There's an opportunity there with Californians and Nevadans. Is that how you say that? I have no idea. I make up words on a daily basis. There's an opportunity there. But do you know that Gen Xers between the ages of 35 and 44 are more optimistic about home ownership? Maybe that's what you need to understand about your market. You will be getting a copy of this because I don't expect you, especially with your data that's specific to your market. That's important because we need you to increase your business. That's how we expand home ownership. Giving you the tools, understanding it from our perspective, right? But from your perspective, you're the leaders. Average borrower income, this is my favorite chart. You know, on a loan application, sometimes you are one person, sometimes it's two, sometimes it's a family of 5. That's what this HMDA data tells us. It's that bottom number. So we know that the average bottom number on a loan application for the US is $92,000. Arizona is $85,000. Who's from Arizona? 1. Can you buy something in Arizona making less than $85,000? Yes. Why are we not having those conversations? Maybe that's an opportunity. How about California, 112? I understand that California is kind of expensive, but do you really? Can you not buy a condo making less than 112? Maybe. Florida, $87,000, and I happen to come from Florida. You can buy a property in Florida if you make it less than $87,000. Those are the conversations that we need to start having and changing. Is that surprising to anybody? These are the guys that closed. But if you know that somebody that makes less than that money could have bought, and they didn't, it's because you haven't had those conversations. Nevada, do you need $86,000 to buy something here? No. Those are the guys that you need to start having the conversation. It's 31% of America, by the way, that we need to start having those conversations. It's our job. FHA loan share. We know that 21% of all loans that closed last year were FHA loans. What are the reasons we go FHA? Less down payment. How much of a down payment do you need? 3.5. How much of a down payment do you need for a conventional? 3. Okay, so I got that. What else? Higher ratios. Great observation. Where's my underwriter? Is that a good thing always? Higher ratios? No. Okay. But that's okay because we're here to serve our community. So when you have a higher ratio, what is the student loan calculation on an FHA loan? 1%, right? How about when you're doing a Freddie Mac calculation? Have we heard of the income-based payment? Do we take those? We'll take an income-based payment, and if you have a deferred or forbearance, we will take a half. Will that make a difference in how you calculate your income and rerun your loan? Yes, it will. And I had it in one of the slides, and I want to see who is paying attention. Of all of those millennials that are out there, what percentage of millennials do not have a student loan? 67% of millennials do not have a student loan. That is a real number, and that was an independent study that we did with Experian, AKA FICO. Is that surprising to anybody? Yeah, it is. I think that's probably one of the deterrents that we have to even speak to millennials, because you ask a millennial, how's your credit, and they'll tell you it's bad. Well, what do you mean it's bad? Oh, because I have a student loan. Does that mean that you have bad credit? No. No, be careful with that. Be careful with that. So what other reasons do we have for FHA loans? Lower FICOs. What do you think the average credit score on an FHA loan was last year? 640. What else? 660. What else? 704 on FHA loans that closed last year? FHA. 680. 580. Where are you from? Because it depends on who you ask, right? Okay, so the average credit score on an FHA loan last year was 691. And in California was 701. Wow. Are those the kind of customers that we would traditionally think would qualify for an FHA loan? Is that a best served customer? No. You know, 2 years ago I saw this one stat that said that credit scores 740 and above was an $8 billion business. And of those 740 and above, 75% of that business was going FHA. Is that a problem? Yes. FHA is a great product. It's the reason that we have the home ownership rate that we do, because it's always been around. It's created the affordability for all of us to participate in home ownership, but it's not the best product for all of us. It is not the best product for all of us. So when I look at this and I said, okay, so 21%, and then I look at a place like Pennsylvania, and I see that 49% of African Americans in Pennsylvania are given an FHA loan, I say, well, that's a big gap. Why is that? And then I look at Hispanics in Nevada, and I look, it's almost 42%. But wait, the number is 20 for the US. Why are 43% of Hispanics in Nevada getting an FHA loan? You think they're underserved? Who's getting ready to bridge that gap? Nobody? You better believe it, because that's an opportunity for you. If you can give somebody the right kind of product for them, then that's exactly what you need to be doing. And that's significant, guys. That's significant because it's more expensive. And we need to make sure that folks understand that we are here to serve them. When we talk about your markets, go ahead. There's lots of different reasons. Absolutely. So the comment here says, and you're correct, which is why the national number is 20, and then we broke it down by state, right? So in Pennsylvania, it's 24. It's about 20 across the board. But then you look at the minority concentration, and anything can happen. And we don't know all of those different factors, and you are correct. But is it significant enough for us to say maybe there's an opportunity? It's significant enough. It's significant enough for us to kind of find out and keep asking. Just like my example with millennials. How's your credit? It's bad. Well, how do you know? Let's continue to ask. Let's continue to ask. So what do we know about the credit scores? 691 is the average credit score in the US. Arizona, 684. California, 698. Florida, 683. Nevada, 676. Pennsylvania, 706. Does that surprise anybody? Yeah. This is why we ask, because all of those nuances that you just brought up, we can't know, because we're just looking at data. We need folks like you, leaders, community leaders, local leaders that are going to give us some of that feedback so that we can have the right offering. Now, I specifically wanted to say the following. We look at what those borrower needs are going to look like, and we're very strategic about it. We look at this. This is how we create the Home One, which is a 3% down. Why? Because millennials, even with the average income that they have, they're not always that 100%. Sometimes they make more money, and down payment, we've been told, thank you for your input, we've been told that it's still about the down payment, so we created the Home One. The Home Possible is, again, that 3%, and it has an income limit. But what I wanted to concentrate on today was how we come up with our borrower needs. That's how we produce the right offering. It's important for you to understand what your borrower needs are so that you can then bring the right product. I understand exactly what this group looks like, because I understand that you probably take your business a little seriously, don't you? Why are you brokers? What's the difference between you and every other loan officer? Better. I knew she was going to say that. Isn't that great when you ask a question, you know what the answer is going to be? Because you're what? Because you're better, because you're paying attention to this stuff a little bit more closely. You are that trusted advisor. Do you know that you can do a 2 to 4 unit with 5% down and offset that rental with your payment? Of course you do. I know that you know that. I know that I had 30 minutes here today and I could talk to you about product. However, it was more important for me to focus on your market. Let's understand what our business looks like, because we already know what the product looks like, don't we? I know who I'm talking to. It's important for you to understand your borrower needs. It's important for us to understand our borrower needs. It's important for us to all understand that we have an absolute duty to serve our community, because we are part of that ecosystem that is going to make a significant difference in what that rate of homeownership looks like, because homeownership is wealth building ship. It's what we do. It's what we do. We're all invested in that, and it's important to all of us. 14% of millennials, if there's a stat that you have to understand and take with you, is that only 14% of them have a mortgage. There's a stat that you need to take with you, is that 60% of folks that don't know that they qualify and are not even asking. That's on us. That's on us. So I want to thank you all for your time. I want to really tell you that I appreciate you coming out here, the feedback that you gave us, because that's actually what's important, because we go back and we have those conversations so that we can adjust what those offerings are going to look like, so that we can serve our community, every single one of us, all day long. Thank you.